Yo, what's up guys, Zuka here, welcome back to another video. Today guys, this is how I made over $174 dollars day trading the Nasdaq, smoking on the gas pack. Basically, today was really tough. I didn't even want to trade today, to be honest, but yeah, the market gives you the opportunity, so yeah, I just traded. So let's go, first of all, let's go through the news. So no news on Monday, so today we were expecting actually low volatility. So first of all, with that, I'm not even wanting to trade, but hey, I'm watching the markets anyways, and yeah, let's see what markets do. So on 4 hours, we have this 4 hour low, this isn't even 4 hour lows, this is 1 hour lows. 4 hour lows are right here. I can put them at white, but it's not really going to help. So we have these 4 hour lows and these 4 hour highs. That's basically it for draws on liquidity. Then on the 1 hour, yeah, that's basically we have nothing. We have these 1 hour lows. That's basically everything we have. On Nasdaq, pretty similar shit. So we have these 4 hour highs, we have these 4 hour lows, this 1 hour low down here as well. Boom, I can mark 4 hour lows if you guys want, but not needed in this case, and that's basically it. We also have these 4 hour lows right here. 1 hour low right here that are marked down on London session opening. Yeah, on London session. So what is the bias for the day, really? Like looking at this, what's the bias for the day? So we are actually, once market opens, of course, the market has already made the move, but we see the market filling this 1 hour weekly weekly open gap, so which is a draw on liquidity, so it's basically like a fair value gap, and it's in both indexes. So what I'm expecting is the market filling this new week opening gap and moving lower and up to these London session lows, and then again to these hourly lows, and then these 4 hour lows. That was my bias, my initial bias. But what happened on market open, especially on Nasdaq, which happened way better, which was much cleaner. So we not only fill these 1 hour new week opening gap, but we also fill this 1 hour fair value gap. And if you go to the 5 minutes, this was right on market opening. So right on market opening, price moves up, fills this 1 hour fair value gap, and then it moves lower. And from this side, like it already took out these 1 hour lows. I'm out for the day basically. Like I wasn't willing to trade on Nasdaq on ES. I was more for Nasdaq because Nasdaq was looking better in terms of this 1 hour fair value gap, while here the 1 hour fair value gap was all the way up here. So we are not touching it yet. So I was more for the Nasdaq, Then I went to 1 minute and waited for a continuation conference. So yeah, I wanted to see like order block, breaker block, equilibrium, or fair value gap entry. But macro opens, and not only we already took out take profit 1, which is for me a red flag. Like we already took draws on liquidity that we wanted for the day, but price is moving higher, and we are looking for continuation. But then I go to yes. And instead of respecting the order block, breaker block, everything, we just break through it. So, like we break these highs. So what does price tell me that? Tells me that price is probably not wanted to move lower. Not only that, because that's not enough confidence, we got a bullish SMT right on market open. So we have these 1 hour lows right here. We don't sweep them out in ES. And again, SMT is like a confluence which I've been talking about lately a lot, which you guys might know. But if you guys don't know, basically it's one of the index. So Nasdaq and ES are correlated, and they're usually always similar, the price moving. But when price in one index sweeps liquidity and the other doesn't, what is happening is this index, basically ES, is telling us that prices want to move higher. And the reason behind it is more about trends and everything. If you guys want, I'll probably do like SMT video explaining what are SMTs, how they work, and like super clean in depth into it. But for now, I'll just keep it simple and say like it's one index sweeps the draws on liquidity and the other doesn't. So this ES doesn't sweep the 1 hour lows. So what is that telling us? That price is probably going to move higher. So in that, you want to trade the lagging index, so the index that is behind in time. So basically like yes, is already moving higher, and Nasdaq is a little bit behind in time. So you want to trade Nasdaq. So after seeing like the order block and breaker block and the order block and breaker block and is expected in the ES, with this bullish SMT, I'm like, okay, I was bearish for the day, but now I'm bullish. And this is what the skill you guys need to have is like not marry your bias. So if you have one bias for the day, but if something else happens in the market, you need to be able to quickly change your mind and like, okay, my bias was this, but now I'm ready for this. Like this is happening right now, you know, because sometimes the market is you are like bearish for the day, and market is telling you like, okay, I want to move higher, but you're like, no, you want to go lower and then go lower, and the market is not going to do what you want to do. The market is going to do whatever. You need to adapt to what the market does, and that's exactly what happened today. So what happened? Like we sweep out this 1 hour fair value gap, price moves lower. What also happens? Instead, not only we create bullish SMT, but we also sweep out all these draws on liquidity. So these 5-minute lows, these 5-minute lows, these 5-minute lows. We sweep all these low time frame, low resistance liquidity, and also these 1 hour lows. So high time frame draw on liquidity, key level, to be honest, to be more precise with it. From then, what are we waiting for? We already have SMT, confirmation conference, whatever. You also have another confirmation conference, so you have a break of structure right here, boom, price break structure. Then what am I waiting for? Order block, break of block, equilibrium, fair value gap entry. What do we get? 1 minute fair value gap gets in. What am I waiting for now? Break of structure or inverse fair value gap out of it, or a candle reaction. I did not enter in candle reaction just because I did not even want to trade today. So if I'm trading, it's gotta be a good trade. So yeah, wait for a break of structure, get that right here, boom, enter on that, stop loss a little bit below the 1 minute fair value gap equilibrium. Of course, you can put on these 1 minute lows, which have given me a much better risk to reward ratio, but for the day, I didn't want to put to be that risky, you know, to be honest, and there was no need. Yeah, take profit 1 on these 1 minute highs, take profit 2, yeah, take profit 1 on these 1 minute highs. You guys cannot see because there is equilibrium mark down here, fuck. I deleted the wrong thing. So on these 1 minute highs right here, this is actually another block when I was looking for bearish entries. So I was looking for bearish entries. This is the other block of the bearish entry, but it did not happen. Let me delete this. We have these 1 minute highs, take profit 1, this 1 minute high, these 5 minute highs right here, take profit 2. I can show you guys, take profit 2 and then take profit 3 all the way up on these hourly highs, and price ends up eating all our take profits. Of course, it wouldn't be like this simple because yeah, what price does was it take profit 1, I took out 33% of my position, take profit 2, 33% of the position, then it's just at break even because when price hits TP1, I'm usually putting price at stop loss at break even. So yeah, got stop out at break even, and then price moves higher and it's TP3. This is the second time in a row that this happens actually. Happened me on Friday, I believe, or not on Friday, probably on Friday, yes. Where price hits my take profit 1, take profit 2, then break even, and that's basically search and destroy. To be honest, to be more precise with it, it's like price searches, destroys, and then moves out to feels basically more orders and moves higher. But yeah, it is what it is. Made $174 for the day, risk 200 only, like super low risk again. Like I didn't want to trade today, that's why I put low risk on the table. But yeah, let's see. Tomorrow we have got some good news. Yeah, we have pre-market news and some news as well. So hopefully some volatility. And hopefully I can up the risk as well. Oh, I'm seeing the wrong day right here. We have CPI news tomorrow. Then yeah, hopefully it is a good day. Trading wise, I'm going to up the risk if there is a good trade. Of course, I'm not upping the risk if there is no good setup. And that's basically it. You know, I've been wanting to up the risk lately. Like, but on Friday I didn't even want to trade. I traded. Today I didn't even want to trade. I traded. So I made like between Friday and today $300. On days that I didn't even want to trade. So imagine when I want to trade, I'll probably lose everything. I'm joking. But yeah, you know, just 2 good days, even with shitty price action. Like if you go to the 5 minutes, there was absolutely nothing. Like price moves up, there's absolutely nothing. There's no break of structure, no inverse fair value gap, no anything that you can enter on it, honestly. Like there's nothing. Yeah, the other thing that you could have is like this 5 minute break of structure followed by 5 minute equilibrium kind of field. And then from there you go to the 1 minute and enter on break of structure, which is, yeah, that's second entry to be honest. Right here, break of structure right here, enter on that, stop loss below 1 minute lows, take profit on the straws on liquidity, boom. And yeah, it would have been a good trade, probably better than the one I took, and it was actually at a good times as well. So yeah, it's a more safer entry to be honest, to go for it, like to go for 5 minute confluences. But I just, you know, when I win, I never enter again. Like if I win, I'm done for the day. Just like if I lose, I'm done for the day. And you need to be okay with it, because if you win and go again, you'll probably lose, because this is a market that 99% of people lose. What makes you think if you made your money, like get out of the market? Don't stay on it thinking, oh, I'm going to make much more. No, bro. Like you made your money, get the fuck out. It's a you guys need to remember that this is a market that 99% of people lose. So yeah, basically when I win for the day, I'm like, I'm done for the day. I'm not going to put any more risk into the table, even if it will have been a good win. It was just like on Friday. The same thing happened on Friday, where I could have entered again when I got stopped after break even, and the trade will have it the rest of take profits. But when you win on the markets, you need to be out for the day, and that's really something that I've been talking about. You know, like discipline and being able to say no to things. You know, be able to control yourself, like take out the bad habits of your life, you know, and focus on really the most important stuff, which is controlling your habits. Like be disciplined, do the things that you should do. Like discipline is easy, and I talked about that in my psychology video. Is one of the easiest skills to master, because you already know what you need to do. All you need to do is do it. That's discipline, basically. And yeah, you know, I made money in first trade, then I'm out for the day, you know, like I'm done. Of course, you know, maybe I could have seen 5 minutes, you know, oh, it's like the better entry right now happening, but like, bro, like I'm out for the day. Like not only I traded in a day that I didn't want to trade, but also yeah, it is what it is. Like I'm done for the day, and hopefully tomorrow we get to good price action. We have news, so we'll have some volatility finally, and hopefully CPI is going to be crazy, but hopefully the rest of the week as well is going to be cool. Hopefully we can get good entries and up the risk a little bit and get some good fucking trades, which is what I've been wanting to have for a long time. So yeah, guys, I hope you guys enjoyed the video. If you did, make sure to leave a like, comment down below what you guys thought, and yeah, see you guys on the next one. Bye bye, guys.